Hello, Wantok. Welcome to the Unicorn Emprise podcast, the podcast for PNG entrepreneurs earning between 0 to 1 million plus kina in revenue who want financial clarity, business structure, and tax confidence. I'm your host, Vanessa, a registered public accountant, founder of my own accounting business, Hello Taxman, a CPA, and a content creator here in Papua New Guinea. In this episode, we're diving into a simple but powerful question. Who does tax law really love? Because once you become that person, that loved, desired person, by the tax law, you will be reducing taxes legally on your hard-earned income in your lifetime. However, for many of us, when we hear the word tax, it just triggers a negative emotion. We think about money being taken away from us. We think about corruption in our country. We think about all the things we could have done with that money instead of giving it to the taxman, who is the government, IRC, the representative. But in this episode, I'm here to tell you that tax law is also designed to help certain people to keep more of their hard-earned money. And wouldn't you want to be one of those loved people? And that is what we're going to be covering in this episode. Like everything else in life, this lovely, beautiful outcome starts with our belief system, with your perspective on the said subject. In this case, it is tax law. So here's what I mean. When you look at tax law, stop looking at it as something that favors the rich over the poor, or foreigners over citizens, or big business over small business. What tax law truly favors is formal businesses over both employment and informal businesses. That's right, that same tax law that applies to big corporations, they also apply to your small formal business too. The core fundamental tax benefits, okay? The difference is that big businesses, they often have tax experts that help them to navigate tax laws to their advantage, while most of us are left in the dark. To illustrate this, let me walk you through this example so that you can easily visualize as you listen. So imagine 3 people. Let's call them Walkman, Abel, and Reggie. Each of these 3 people, they earn around 5,500 kina of income per fortnight. Walkman is an employee at a big company in Port Moresby. Abel runs a informal business or table market as a retailer. And Reggie operates a formally registered small business, a retail one, just like Abel. All 3 of them earn the same amount every 2 weeks, but their tax situations are very, very different. You see, Walkman, our employee, he pays around 1,700 kina of taxes. And that's automatically deducted on his payslip by his employer and paid to the IRC. So then the leftover that he has, his net income, he goes and spends it on his personal expenses, and let's say he pays around 300 kina of GST. So that brings it to a total of around 2,000 kina plus in taxes every fortnight. That's Walkman, the employee. Next is Abel, that's our table market person, retailer, informal business owner. Okay, he doesn't pay income tax on his business income, but he should legally, technically. But he does pay around, let's say, 500 kina in GST to buy the business expenses, informal business, but more or less business that he pays GST on to buy his products to resell. However, he can't claim any of this GST back because his business isn't formally registered, particularly for GST or for income tax. So she lives in this constant risk of being caught out for not paying income tax, and that could lead to high tax penalties. Now, Reggie, the third one, our formal registered business owner, also has 5,000 kina in expenses like Abel. Thus, she pays around 500 kina GST. Let's imagine. But here is the difference. Reggie pays 0 income tax if she structures her business properly. If she spends 5,000 kina and it's all proven business expenses, she pays 0 kina of income tax. She does spend around, let's estimate there, 500 kina in GST tax, indirect tax on her business expenses, but because she is registered, and particularly for GST, she actually can get a GST credit worth of the 500 kina. So she gets a tax benefit of 500 kina. Okay, so let's let that sink in for a moment. Same income of 5,500 kina, but very, very different tax outcomes. Okman pays around 2,000 plus kina in taxes. Abel pays 500 kina in GST taxes and risks tax penalties because of the informal operations. Reggie pays 0 income tax and gets 500 kina back from the GST credits. Those are small numbers, but if you multiply them over a year, over 5 years, over a lifetime, that difference becomes pretty big. But here's the catch, and it's an important one. You have to follow the tax rules. Okay? Tax law only loves those who play by its rules. This isn't about tax evasion or doing anything illegal. It is about understanding the system and using it legally to your advantage. Think of tax law as a game. Like any game, you need to understand the rules to win. And most people lose at the tax game, not because the rules are against them, but because they don't understand how to play. Let me emphasize, this isn't just for big businesses. The same basic tax advantages apply to all formal businesses, including the small, medium enterprises run by everyday Papua New Guineans like you and me. The problem is, most of us have been taught to see tax law as an enemy, something that takes away our hard-earned money. But what if we started to see it as a guide? A guide that, when followed correctly, it actually helps us to keep more of our hard-earned money. And that shift in the perspective starts by changing your belief systems about taxes. And I want to share with you 3 key beliefs that you can start installing into your brain cells today onwards. Okay, first, you got to believe that tax law is a guide for you to legally reduce taxes on your hard-earned income, because it is. It's written into the laws. And secondly, understand that you actually will earn more money when you learn more about tax benefits. Think about our example. And lastly, playing by the tax rules leads to keeping more of your hard-earned money. It's the game. Follow the game plan. And when you embrace these 3 beliefs, you start opening the door to tax education. And when you get educated about legal tax reduction, you become a tax literate entrepreneur. And that way you can fight corruption by keeping more of your hard-earned money to do the things that you want to do to develop this country, help your community, and build a profitable formal business venture now and into your future. So how do you start this journey? With me, it's by starting to change your beliefs and then identify which tax debt bucket you're in. I spoke about this in the last episode number 4. If you didn't listen, go ahead, listen to it. You need to identify where you're currently at right now and acknowledge it. Are you in the tax debt bucket called the tax liability bucket, where you know exactly how much taxes you owe? Or perhaps you're in the tax illiteracy bucket, where you're not sure and you might be at risk. Or worst of all, you could be in the tax ignorance bucket, where you don't even care to know, but you're here listening. So there is hope. Once you know where you stand, then you can start taking steps toward that less tax debt and more pocket money reality that we all want. So as we wrap up today's episode, I want to leave you with this challenge. What could happen if you used your precious time to increase your tax education and literacy to fight corruption instead of endlessly complaining about it? Imagine if more of us Wantoks, we understood how to legally keep more of our hard-earned money in our pockets. Imagine the businesses we could build, the communities we could support, the future we could create. Tax law loves formal business owners who follow the tax rules. And the real question now is, are you ready to become loved by tax law? Okay, Wantok, and that's all for today's episode. I'm your host, Vanessa Gator, and join me again next time on the Unicorn Emprise podcast.